Evergrande is one of the world's largest property development businesses. Hui Ya Kan, the owner, is the richest man in China. They're also in technology, automotive, electric vehicles, consumer products, tourism, but real estate is its core. Its assets at the last count were totaled over 147 billion. So what's the problem? Their debt to asset ratio. On average, they have a score of 6 and an acceptable score is 0.3. So the creditors started calling, they want to collect. This is what the Chinese government doesn't want to happen because Evergrande is subject to the government-owned finance, the People's Bank of China, and the country's Insurance Regulatory Commission. The problem began in the beginning of the year. The Chinese government tightened credit and capped mortgage loan amounts. They wanted to avoid a property bubble in the cities. And they knew people were going to have problems paying their mortgages because of the coronavirus. Prices jumped so high that the Chinese government had to step in again and raise mortgage rates. The result, an even lower sell-through rate. Shares fell 60% this year and now are at a 4-year low. And then the Chinese government asked Evergrande to pay down 40% of its debt in one go. Nobody could do that. The debts haven't been paid. CNBC reported that the S&P had started red penning the business back in August. Their workers are also protesting for non-payment of wages. Finally, this morning, JP Morgan's target price for Evergrande shares nosedived from the initial starting price of $7.20 to $2.80. There's two outcomes for this scenario. China doesn't bail out Evergrande in December, or China bails out Evergrande, or rather is liquidated by China, who basically gets to own the company. Either way, Evergrande's problems have coincided with a wearing investor appetite for stocks. The S&P 500 fell 5.2% on September 22nd to September 20th. But Evergrande isn't the only source of the stress. Economic indicators, for instance, have been going sideways recently. Employers added just 235,000 workers in August, well below market expectations. Retail sales have jumped around while consumer confidence dropped to basically a 6-month low. Rising inflation continues, and many believe the Federal Reserve will soon announce it will again buy fewer bonds starting in November. The so-called tapering, while not as important as raising interest rates, does signal that the Fed is inching away from its emergency policy of pumping in a lot of easy money to help the economy recover from COVID-19. As of right now, I don't see any systemic risk for the global economy from the Evergrande situation, but there doesn't seem to be any systemic risk in order for markets to be affected. And that's why you need to be prepared. And we're seeing some signs of a panicking market. That's why you need to hedge your portfolio. And if you're looking at gold, give us a call at 877-646-5347. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.